Welcome to the Fear and Greed Business News Afternoon Report for Friday, the 20th of December, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the ASX 200 closed the day down 1.2% to 8,076 points, following the 2% drop yesterday. Whether it was the lead of Wall Street, fears about inflation, profit-taking, whatever it was, the market ended lower and at one point today hit a 3-month bottom. The banks got hit hard, as did the consumer discretionary stocks. Wesfarmers finished down 5%. JB Hi-Fi was off more than 2%. The energy and utility sectors performed best, with Woodside rising a couple of percent. Story number 2, not a great day for the Australian Securities Exchange, with the CHESS system crashing. The exchange notified its regulators, the Reserve Bank and the Australian Securities and Investments Commission, about an issue that has caused a delay to settlement processes this afternoon. Some failure in the ASX CHESS batch processing systems means payments for trades are not going through, according to the Fin Review. The CHESS system manages share transactions and documentation. CHESS remains available late this afternoon to provide sufficient time for CHESS users to complete activities following resolution of this issue. Although, as we go to where, I'm not sure that the issue's been resolved as yet. Story number 3, the big superannuation funds are overweight banks, increasing their ownership of the big 4, or in fact all Australian banks, to 29.7% in September from 27.9% a year earlier. Buying by the big super funds has been a key reason why bank stocks have performed so well this year, notwithstanding Commonwealth Bank today hit a 1-month lower after it fell 3.7%. Banks have also benefited from rising passive and exchange-traded fund flows. According to Morgan Stanley, bank valuations are now 7 times above the long-run average on an earnings multiple basis. In other words, they're very expensive on a historical basis. Over the last year, Westpac is up 39%, Commonwealth Bank is up 35%, National Australia Bank has risen 19%, ANZ 8%. Story number 4, Wesfarmers will sell its core gas business to a subsidiary of Nippon Sanso Holdings for about $770 million. Once completed, Wesfarmers expects to report a pre-tax profit on the sale of somewhere between $230 and $260 million. Core Gas is part of Wesfarmers' Industrial and Safety Division and is one of Australia's largest manufacturers and suppliers of industrial gases. The business distributes industrial, medical and specialty gases in cylinders, offers a wide range of bulk gases for medium to large users. Nippon Sanso is listed on the Tokyo Stock Exchange and is headquartered in Japan. The sale is subject to the receipt of certain consents, also needs tick of approval from the Competition and Consumer Commission and the Foreign Investment Review Board. And story number 5, New York-listed soft drinks group, the Coca-Cola Company, has bought the ready-to-drink spirits business of Bilson's Beverages, the Victorian group that collapsed in late July. Bilson's Beverages sells vodka-based drinks with flavours such as berry jelly, musk, green apple and grape burst through Endeavour-operated retail chains Dan Murphy's and BWS, Liquorland, that's owned by Coles, as well as independent liquor stores. According to the Fin, administrators McGrath-Nicol took control of the operation on July 31, ran a sale process for the business, which originally was established in 1865 in regional Victoria. Coca-Cola, with a share market capitalisation of $269 billion has acquired only the ready-to-drink spirits business, with Nathan and Felicity Cowan, who owned the business, to keep running the much smaller Bilson's cordial soda and beer operations. That's it for the afternoon report for Friday, the 20th of December, 2024. Make sure you hit follow on the podcast. We'll be back tomorrow morning with the weekend edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.